Welcome back, investors, to Ticker Time News. I'm Adam, and at the beginning of the year, I said this would be a year of consolidation, and there's been a lot of M&A activity so far in the first quarter. Remember that blockbuster deal or mega acquisition, however you would like to view it, of Activision Blizzard by Microsoft, or the Take-Two takeover of Zynga? Well, we have a new bidding war brewing for Spirit Airlines, ticker symbol SAVE, SAVE. The ultra low-cost carrier has landed on JetBlue Airlines' radar as an acquisition target. Now, to get you up to speed, about 2 months ago, Frontier Airlines made a bid to acquire Spirit in a cash and stock deal that valued Spirit at $2.9 billion, not including their debt. JetBlue has upped the ante, offering $33 a share in an all-cash deal for the airline. Now, the offer implies a fully diluted equity value of $3.6 billion, and that represents about a 38% premium over Frontier's proposal, which equates to about $24 a share based on Frontier's stock price at the recording of this video. You should increase the value of your portfolio too by clicking the first link in the description. I'll see you there. Okay, JetBlue and Frontier stocks were both down sharply after the news, and Spirit is trading well below the $33 a share buyout offer too. So it's safe to say that investors are not excited about this turn of events. For starters, JetBlue's bid complicates matters and creates uncertainty for each company involved. This is likely to be a long, drawn-out process with an outcome that's difficult to predict. Now, there are other reasons why this development is creating turbulence for these stocks and across the airline industry too. Let's go. Hear me out on this. For Frontier, the significantly higher bid from JetBlue puts the pressure on enhancing its offer. The idea of entering into a potential bidding war with JetBlue, which has way more cash on hand at $2.8 billion for JetBlue versus $918 million for Frontier. That is not appealing to Frontier at all. There was enthusiasm for the Frontier Spirit merger. Frontier shares rallied by nearly 20% over the 3 days following the February 7th announcement. In my view, the combination provided a sensible path for the two companies to better compete against the industry's big four: Delta Airlines, United Airlines, American Airlines, and Southwest Air. With Denver-based Frontier already having a strong foothold on the western U.S., the addition of a Fort Lauderdale-based Spirit would be highly convenient and complement for each other, expanding Frontier's service across the East Coast and into the Caribbean and, of course, Latin America region. Once completed, the company, per Frontier's estimation, would achieve annual run rate operating synergies of $500 million. Both airlines also compete in the ultra low-cost carrier segment of the market. So the integration and blending of cultures, work processes, and strategies would be relatively smooth. JetBlue's proposal throws a wrench into this merger, potentially removing a major growth catalyst for Frontier. Meanwhile, JetBlue investors are contemplating whether Spirit is a good fit and whether it's worth taking a multi-billion-dollar gamble on. Considering that Spirit's flight route map is rich in leisure travel destinations, it's easy to understand JetBlue's interest. As a New York-based airline that regularly competes against the Big Four in hub cities like New York, Chicago, Boston, and LA, expanding its exposure to smaller, less competitive markets in leisure-oriented geographies is attractive for JetBlue. However, Spirit seems to be a better fit for Frontier than it does for JetBlue. Notably, both JetBlue and Spirit are East Coast-centric, which would create plenty of overlap regarding flight routes. This could also lead to regulatory issues due to competitive concerns on the East Coast. Furthermore, JetBlue is already at the center of a Department of Justice investigation because of its Northeast alliance with American Airlines. So it seems like a long shot that JetBlue would receive regulatory clearance to merge with Spirit Airlines, given that it's already under the government's microscope. Unlike Frontier, JetBlue is not an ultra low-cost carrier. and its fleet is arranged to compete against other higher-priced carriers. For instance, it's housed more legroom in its aisles. I know it might not seem like a big deal, but when you're packed like sardines on an airplane, it can be. While Spirit can offer lower fares by packing as many people on the plane as possible. Now, the main takeaway here is that JetBlue's higher bid for Spirit has put its merger with Frontier in doubt. And perhaps that was JetBlue's intention all along, since a combined Frontier Spirit would be a much stronger competitor. And it does seem unlikely that JetBlue Spirit combination would receive regulatory approval. Whatever the development may be, the development is creating disappointment across each shareholder base, including Spirit's, as the odds of completing a merger with Frontier diminish as each day passes by. So let me know, which deal do you think Spirit Airlines should choose, Frontier or JetBlue? Let me know in the comments. And if you could, smash that like button, share this video, and beat the market with us by clicking the first link in the description. And if it's your first time watching, click subscribe. For Ticker Time News, I'm Adam. Thank you so very much for watching, and I'll see you in the next video.